Hey, welcome back, Pure Structure Traders, for another market analysis for the London session. Today is March 1st, 2021 here in Hawaii, and will be March 2nd, 2021 in London. Hopefully, you guys had a great trading day for the US session. We're going to give you guys some levels here on S&P 500 and also gold that potentially could be used for the London session and move into the US session if the market is there. So let's go ahead and start off here with S&P 500. Take a look at a bigger chart here. We did have a nice bullish run today from that gap up on Sunday, which my time moved, and we continued to keep moving up, up, up. You can see that climb, and we climbed as high as 39.1075 was my target level of resistance as a measured move, and we started to move down from there. So I'm anticipating the market to try to pull down a couple levels that I actually have. 78.50 as more of a support, a more closer support here. If we do get that bounce, maybe a nice bounce off, and then try to pull right into these 93s to about 98.25. Do want to see if the market continues to hold this. Now, if it continues to hold that resistance there, we're actually going to look for a move right back down into the support and potentially lower. You could see some supports underneath those 38.69s as another level for me. 38.56 and also 38.48 as another level. Underneath that, we will have some areas. I didn't mark this one here. I don't know if the market's really going to hold that. I'm actually looking for somewhere around 21 to 25 as another level of support once we get underneath these 48s. So it is going to be interesting to see the market and how it works out itself for the London session. Kind of in a little bit of a nasty area right now, so do want to see if the market either gets down here first to these 78s and even potentially 69s, and if we can hold a nice bounce from these areas, we potentially can try to look for the move to go back up to the upside. We do have that level of resistance at 93 first and then about 98.25. Now, if we are going to look for the market to try to pull up from this area and break up, we are going to try to break through those 39.1075s. Past that, I do have another area of about those 35s. There is going to be some resistance before then, right around these 2021s as another level, but we'll see if the market can actually get past these 1075s first. That's a pretty strong level of resistance right now, and potentially we can actually see the market maybe even pull a little bit deeper if we continue underneath these 93s. So for now, because it's underneath 93, we're going to look for that momentum to maybe shift a little bit lower. If it doesn't do that, watch out for the break of those 98s, retest of the 93, and continue that bullish move to the upside. We'll see what the market gives us for that London session. Let's take a look at a smaller chart here real quickly for you guys. Zoom you guys in here, give you guys a better idea of what we're looking at. So you can see, if we kind of zoom this out just a little bit, you can see what I mean as far as that resistance kind of holding here on S&P. Right here you can see one, we did pop up a little bit, two, and then another three try right there. Three try failure here. We could see the market try to pull down a little bit from here and make its way into those 78.50s as support. So you can look out for that. It's more of a minor level. Again, maybe a little bit of an uglier area. If you're not comfortable with this area, wait for that pullback to come somewhere around these 93s or potentially 98s. If it fails to get above that, then you can look for that market to move down. But if you want to look for the long, I got support at 78.50 as a first level of support. If you don't want to play this area, again, look for the market to come to those areas first. But my first strike price may actually be between these 87.75s to about 85.75 as a potential move to the downside. Nice little bit of a pin bar right there. So we'll see what the market gives us and if we can get a fall out from there. Now let's take a look at gold here. Give you guys some levels here up on gold as well. For gold, you could see a very nice bearish trend that took place. And we got a lot of different levels that we want to look for. So more of a current level for me, or a more interesting level that I'm going to be looking for the London session, is if the market can't make it past these 1713.8. Going to see if the market holds this level. Now, if it holds and it fails to get through, that's going to be another good move back to the downside. Now, strongly bearish, so you want to watch out for trying to go and trade to the long side, unless I would feel more comfortable if we get back above 17.5 as an area, then definitely hold that support and see the market try to pull up from there. But anything in between this area here at about 17.5, underneath that, or even right here at 13.8. That is strongly bearish still, and I would consider movements down or trades to the downside if we don't get past those areas. First level again for me, 1713.8. That is going to be an area of resistance that I want to look for a continuational trend trade to the downside. I have a measured move right there at 1701.3. That is going to be my downside movement for the London session and maybe even into the US session if we don't get that movement. Let's take a look at a smaller chart here real quickly on gold. So again, you can see slightly holding this level. So really want to see this market kind of pop right back into these 13.8s. Now, if we fail that, you'll see similar movement. It popped a little bit above this, nice double top movement and failed right down below, came right underneath and continued to fail, and then moved its way down deeper. So you can see here's that high, here's the new low that it created right there. So we want to pay attention to that. A lot of times, do want to point out with you guys, a lot of times you can actually get mixed up in higher highs and higher lows, especially if you're looking on smaller charts like this, range bar charts. You can neglect the bigger major levels and start to use these micro levels as areas of trend movement, as far as like say you're in a downtrend here and you're looking at higher highs and lower highs and lower lows. You can actually neglect these areas right here and start to move it down like this, where you can see this new low and you would consider this as a lower high and looking for the continuation, which is not wrong. But when the market pulls back, you can, a lot of times, sometimes we'll see traders actually get caught up in this and look at this as a bullish move when it's actually just coming back to a main level of resistance. So if that's something you struggle with, or have a hard time seeing, one recommendation is to look at bigger charts or longer time frame charts or range bar charts, whatever helps you zoom out. Another recommendation is to get, to sit down with somebody that best understands this, to help you better understand how to look at these things and pay attention to them, right? Because if you get too caught up in those micro movements, you can actually be reading the trend incorrectly. So we want to pay attention to that. But if you do struggle with that, feel free to reach out to us. If you're struggling with inconsistency, feel free to reach out to us at Pure Structure Trading. Again, we will be launching very, very exciting stuff coming out. And again, we have some programs that will help you guys better understand how to trade in markets, how to look at markets, how to read the correct price action and market structure. If you guys have any questions though, you can pop them in here on YouTube. If you guys do like these videos, please go ahead and smash that like button. If you're not subscribed to the channel yet, please go ahead and subscribe. If you guys are, really appreciate you guys watching these videos, leaving comments. Definitely really appreciate that. Again, if you find inconsistency in trading, or if you're struggling with that, if you're struggling with just understanding how to correctly read the charts, right, it's best to sit down with somebody that knows how to read them correctly. Get with a mentor or at least a community that can better help you understand and move forward in your growth. Because, a lot of times you will notice that if you're just by yourself doing this, you're going to get caught up in your own head. You're going to get caught up in your own emotions. If you're not strong minded, a lot of times those emotions, when you have in trading, and if you blow out account after account, they can wear you out, right? They can cause you to want to quit. So to be around people who can help you motivate you, or who can help motivate you, who can help you see things better, who can help you understand things, who can kind of keep you afloat when you just feel like you're just being pulled down under, right? You just want to quit. Those are the people and the communities you want to be around. So, with that said, guys, we're going to call it a night. Look out for those levels for the London session and potentially into the US session. You guys take care. Have a great night.